Imagine holding your entire life's earnings in your hands and watching the ink and paper lose its value in seconds. Hyperinflation creates an environment where time becomes more valuable than the currency itself. A $4 gallon of milk at 8 a.m. becomes a $40 gallon by sunset. The math of a lifetime's labor is erased. Someone who saved $500,000 for retirement finds that 40 years of work now buys them a few weeks of groceries. This vulnerability is why de-dollarization is moving from a theoretical risk to a primary concern. Nations are already looking for an exit before the system fails. The failure of the dollar would trigger more than a market crash, forcing a global rewrite of how we trade the world's basic resources. The initial shock hits within the borders of the US. As the currency's value drops, the internal economy is forced into an immediate defensive posture. To combat hyperinflation, the Federal Reserve is forced to hike interest rates to levels previously unseen in modern finance. This chart shows the trade-off. As hyperinflation spikes along this curve, interest rates rise even faster to meet it, crossing the point where standard consumer mortgages and business loans become mathematically impossible to pay. The freeze hits the public sector next. Municipalities lose the ability to issue valid currency, leaving police, firefighters, and medical staff without pay as essential services shut down. With paper money losing its function, commerce turns to physical commodities. Households resort to trading gold, silver, and fuel to secure basic necessities. The first casualty of the collapse is the stability of daily American life, as the systems that guarantee order cease to function. The dollar's role as the global language of commerce means the damage cannot be contained. It is the primary currency used for pricing international goods. Global petroleum is the clearest example. Without a dollar standard, a Saudi seller has no reliable way to quote a price to a Japanese buyer. This pricing crisis invalidates the insurance and contracts that underpin global shipping. With the value of payment unknown, the risk of transit becomes too high to manage. This results in thousands of cargo vessels sitting idle at their ports. The physical freeze leads to immediate shortages of food, medicine, and tech worldwide. Global survival depends on a universal translator for trade. Without the dollar to serve that purpose, international commerce stops moving. The structural risk goes deeper. Most of the world's international debt is owed in US dollars. As the dollar fails, emerging markets in Asia and Africa find themselves unable to pay back loans that were pegged to American currency, causing their local economies to crash in tandem. This is a close-up of US savings bonds, the physical reality of our national debt. With over $34 trillion outstanding, the inability to issue valid money means the US can no longer meet its obligations to bondholders. This default removes the teeth from American soft power. Economic sanctions lose their impact when the US can no longer control the flow of the world's primary reserve currency. A global vacuum opens, and rival nations move to fill it. China has already positioned the yuan as the primary contender for the global standard. A total collapse of the dollar would dismantle the existing financial hierarchy, leaving the United States without its primary tool for global influence. Despite the scale of these risks, a total collapse remains unlikely in the near future. Global markets are built on a concept of shared risk. Because the world is so heavily invested in the dollar, no major economy can afford to let it fail. Nations that compete with the US will still fight to keep the dollar stable, because their own domestic growth depends on the stability of the global currency they use for trade. This network represents the inescapable nature of global finance. A break at the center triggers a collapse for every connected economy. The dollar remains the global standard because the world is built on it. Most nations will fight to keep it stable, simply because their own survival depends on its success.